Okay, hi everyone, welcome back. And in this update, we are going to check out QNT's chart. And I do believe, a spoiler alert, there are some very important points in the recent move on the upside in like very short term. But before that, we are going to talk about a very important article that came out recently about Quant. And this dives into some genuinely important points. And if you are into crypto, fintechs, or just the future of money, I think this actually worth paying attention to. So let's start with the big headline. And as you can see, it's actually Quant Flow. And you might ask right now, in case that you are a new viewer, what is exactly Quant Flow? You see, Quant Flow is basically a new programmable money and banking infrastructure created by Quant itself, and it is aimed at banks, institutions, and big corporates across Europe, Middle East, and also APAC. But here is the clever part. It is actually offered as something called white label solution. And for simpler people like you and me, that means banks and institutions can roll Quant Flow out under their own brand, meaning on the surface, customers may not even know Quant is behind the service that they are getting. No, but under the hood, Quant Flow is completely running the show. You see, at the core, Quant Flow embeds programmable logic right at the account level. And that means instead of money just being a simple number that just moves around, money itself actually in this situation becomes programmable. You can add roles, triggers, automated actions directly into the account. It means banks and corporate clients do not really have to rip out or replace their entire core systems, which is, as I'm sure you know it by now, usually very expensive and also extremely risky. Instead, they just add Quant Flow on top, and all of a sudden, your money is much smarter. They also built a custom scripting language called, you know it, PayScript. And you need to think of it like writing short specific scripts that define new financial products, payment flows, or automation, all without coding a whole new banking backend. So with the help of Quant Flow, banks can rapidly test, prototype, and roll out new products, which is fantastic. But let's talk about why this even matters. You see, this article explains it, I would say, relatively well. They say, today, even though money looks digital in your banking app, under the surface, however, it actually still runs on pretty ancient rails, and they are talking about the systems that were designed like decades ago. Banks right now fully understand that they need to catch up, but it's very hard. They are squeezed by three very important things. Number one, stable coins and CBDCs that move faster. Number two, fintechs and neobanks that innovate much more quicker. And number three, constant changing in regulation that add cost and very much complexity. So the big question in here is this: how do you modernize your offering without blowing up the entire system and risking maybe downtime or possibly even huge costs? That is exactly where Quant Flow comes in clutch. You see, instead of starting from scratch, it actually adds just a new layer of intelligence. And with it, number one, banks can quickly innovate, keep legacy systems running, and still roll out new features. Number two, they can offer smart contract products, for example, like dynamic account options, or maybe automatic money management tools that respond to real-time data. Number three, Quant Flow actually automates boring but very much critical stuff like currency conversions or compliance processes that otherwise requires teams of experts. And number four, with dashboards and real-time data, banks and corporates can actually see what is happening instantly and make much better decisions. For banks, it is about defending their market share, protecting profitability, and then finally being able to compete with fintech speed without compromising security or compliance. For corporates, on the other hand, it means they can automate complex financial workflows, handle global payment much more efficiently, and at the same time hopefully be able to cut a lot of cost. That is the big picture of Quant Flow, a bridge between ancient world of banking and the programmable automated data-driven future. Now, let's dig a bit deeper into what actually makes Quant Flow very much special, not just another blockchain buzzword product. You see, the real game changer here is something called PayScript, and we talked about it earlier. It is a domain-specific language built by QNT, and in plain English, this means that it is a special purpose coding language designed specifically for banking and payments. It's very, very important to understand that. And the question is, why does this actually matter? It's because banks have always struggled to launch new products quickly. Every single time that they want to build a new feature, I don't know, let's say an account that automatically splits income into savings, investments, and expenses, they would usually need months and months of developer times, integration testing, and regulatory checks. With PayScript, on the other hand, you can actually define those new banking products or possibly payment flows using just a few lines of code. So it is almost like giving banks fintech level agility, but without tearing out the old systems. And even better, because it actually abstracts away technical complexity. It isn't just core banking developers who can use it. No, product teams or innovation teams can also experiment and deploy new ideas in here. Now, let's talk about some very important examples about how this could potentially work. Number one is smart automation. You see, banks could potentially set up automatic triggers to handle things like tax, payments, currency hedging, or possibly even repayments, all based on real-time data instead of manual processes. Example number two is dynamic products. Imagine an account that adjusts its interest rate depending on your spending behavior or broader market conditions. Example number three, faster, cheaper payments. You see, automating cross-border payments, whether it's actually in regular fiat or maybe stable coins, is absolutely great. And with the help of Quant Flow, banks actually can do this thing beautifully. And here is another very important point. Instead of running quarterly audits with spreadsheets, you could actually, with the help of Quant Flow, build role-based automation that handles reporting and reconciliation almost instantly. Now, here is why it actually gets strategically interesting for banks. You see, Quant Flow isn't just a fancy odd or side project. No, it's actually a way to turn traditional commercial bank money into programmable money. And in fintech speak, this means that it's actually moving from transactional finance, where money just sits there waiting for instructions, to possibly programmable finance, where money can do things automatically based on business logic or possibly user-defined roles. And this fundamentally positions Quant not as another crypto project, but as core infrastructure for the future of money, because this helps banks competing with agile fintechs and stablecoins without ditching their legacy systems, and by making the intelligence live at the account level rather than just on the blockchain or possibly network layer. Quant is carving out a very unique space compared to projects that are purely blockchain native. And now let's just step back and see how this fits into what is happening at the moment to the broader financial world. Point number one, there is a huge push toward tokenizing real world assets. And specifically, I would say recently I have seen a lot of examples about tokenizing real estate, and I think XRP and Algorand are quite active in that area. But overall, the aim of tokenizing real world assets is to turn every single thing from real estate to possibly treasury bills into programmable digital assets. Point number two, programmable money is becoming central for things like CBDCs and stablecoins. And point number three, businesses want real-time data-driven finance, not static spreadsheets and quarterly reports. Quant Flow taps into all of this, but in a way that keeps TradFi in the loop by making commercial bank money programmable, not just the crypto native tokens. No, in other words, it is actually building a real bridge between banks, corporates, and the digital asset world, and that could be, in my view, a very, very important deal. So let's just wrap this up by talking about what really makes all of this matter and why it could be potentially a game changer for QNT itself. Let's start with two quotes that really does, in my view, sum up the vision here. Quote number one, Gilbert Verdion, Quant's founder, said this: with the help of Quant Flow, we can turn money into programmable instrument embedded with code, not just spreadsheets. Think about what that means. It means money stops being a passive thing that you move it around in Excel or maybe banking UIs. No, it actually becomes active, intelligent, and capable of running logic on its own. And then there is David Yates, former president at MasterCard. He said programmable money is the next generation of finance, and it is here today. And he is not talking about some hype cycle token. No, he actually means programmable money as real production grade infrastructure that banks and corporates can actually deploy right now, not maybe in, like, I don't know, let's say 10 to 15 years. And what could this mean for QNT itself? Well, I think three very, very important things. Number one, it cements Quant's role as a serious infrastructure provider for big banks and enterprises, not just another speculative crypto play. No. Number two, it unlocks new revenue streams. For example, you need to think about white label licensing, maybe consulting, maybe potentially fees on usage or transaction volume. And number three, it actually aligns perfectly with the broader Overledger vision, which is one, interoperability between systems, two, programmability at the money layer, and three, compliance built in by design. And the last piece, meaning compliance, is very, very important. Most crypto projects cannot really compete here because banks and regulators demand certainty, reversibility, and auditability all at the same time. And by building programmable money into existing bank stack, Quant Flow offers banks fintech speed without blowing up compliance or risking the core system that they are still going to need. So here is the bottom line. Quant Flow isn't just another product drop. No, it's actually a huge step in Quant's bigger plan to, number one, move the world from transactional finance to programmable finance. Number two, help banks innovate faster than ever while at the same time still playing by the rules. And finally, be able to position QNT as an indispensable layer in the new financial operating system where money itself isn't just stored but becomes smart, automated, and dynamic. And if we zoom out, this is why the future looks very much bright for Quant, with real products, real adoption potential, and a major focus on regulated higher stakes institutional space. You can see why fundamentally there is many reasons to be optimistic and why a big bull run for QNT wouldn't really be at all surprising. That, my friends, is why I am so bullish on Quant. Because let's be honest, if we are going to have an alt season, and I am kind of sort of convinced that we are going to have it, well, okay, I think it makes perfect sense to say that we should buy projects that have great looking charts and yet at the same time fantastic fundamentals. And in this situation, QNT actually ticks all the right boxes. So overall, I think this article is very important and bullish, and I would highly actually suggest to just give it a read yourselves so you can have a better understanding of what is happening in here and why is it that, in my opinion, QNT is going to be a big winner by the end of this cycle, and we will probably see price explosion. Now, having said all that, let's go on the live chart and see what is happening, because now I think we are actually able to identify some optimistic signs. So if you remember, the last time that we talked about QNT, I believe we were somewhere around these areas, and the idea was that we can have a consolidation pattern, a correction structure, possibly in form of an A, B, C, D, E, a triangle, and then we can get yet another move on the upside if we want to be bullish and call this point our final low with a decent bit of confidence, and hopefully it seems like that we are actually getting that move. Now, here is a very important point, and I need you to pay full attention to what I'm about to tell you right now. If you want to say that the low is in, then okay, you need to be able to find off of the lowest low a 1, 2, 3, 4, 5, and here are two very important points. Number one, what happens after a 5 wave up? You know the answer. even if we are bullish, we are going to have one way or the other a move on the downside, and in case of the bullish scenario, a very slow and choppy move down. Point number two, you see, under any kind of circumstances, in any sort of wave, wave 3 should not be the smallest wave. This is a huge no-no in Elliott waves, okay? It's very important to understand that, because now we are going to use the principles in our analysis. Okay, are we going to say that this is starting from, I don't know, let's say here, 1, 2, 3, 4, 5 wave up into a wave 1, correction for wave 2, big move up into wave 3, let's say, sure, a triangle and ABCDE into wave 4, and we are having yet another move up into wave 5. Can we have this thing as one likely possibility? The answer is yes, but there's actually a very important point in here. Let's just do this and put the chart on regular first. Always put the chart on regular when it comes to measuring moves and waves. Okay, it's very important to understand that. I am going to keep saying this in every single video. Now let's measure our supposedly wave 1 from this point to about here and see, is it actually bigger than our wave 3? As you can see, the answer is surprisingly yes. Now, here's the situation. If you want to still say that this is a 1, 2, 3, 4, 5 wave on the upside and nothing else, then okay, by design, wave 5 should absolutely not be bigger than wave 3. Why is that? Because at that point, wave 3 in this structure is going to be the smallest wave, which is a huge no-no in Elliott wave. So what is it that I'm trying to say? If this is a 1, 2, 3, 4, 5, and maybe not some sort of an extension structure, then okay, somewhere around these areas, I'm going to tell you in a bit exactly where we need to stop going up and have at least a consolidation pattern, a correction, which is on the same degree as this whole 5 wave on the upside. And what is that level exactly that we really shouldn't pass it? Let's just measure the length of this move, okay, and put it at the beginning of our supposedly wave 5. Okay, there we go. As you can see, we shouldn't really go beyond $120 in the current phase, maybe about like another 5 to 6%. If we do that, okay, that's actually going to have some very important messages. Number one, if we are going to go above 120, then okay, at that point, under any kind of circumstances, we do not want to see a move down in order to take this low. Why? Because that is going to confirm that instead of a 5 wave, we're just having a correction structure on the upside in here. And point number two, if you see QNT going past 120 and then we just continue going higher and higher, at that point you need to probably count on an extension scenario. Let's go on a less busy chart, maybe from Binance. So here's the situation. I think it's absolutely fair to consider an ABCDE in form of a triangle in this area, but there's also another possibility, and I'm really not interested into talking about it a whole lot because that's actually going to be the most optimistic county in here, and I really do not want to get your hopes up too much. But you know, we're just going to talk about it once and then never ever probably talk about it again. This can be 5 wave up into a wave 1, correction for wave 2 to about this point, and the current move can be, and again, focus on this word, can be a very strong one up into wave 3, 4, 5, which on a higher degree might be into a wave 3, correction for 4, another move into wave 5, and even that one is going to be into a larger degree, wave 3, correction for 4, another move into wave 5. And if this scenario is happening, well, okay, in the short term, you need to see some very strong moves on the upside in QNT. And I think in terms of the targets, I believe the bare minimum one is going to be somewhere between 145 to 150, probably even 160 to 170. But again, since this is the most optimistic possibility, I'm not really interested to talk about it a whole lot, okay? I want to be realistic and give you what is the most conservative scenario. So in case that we go up with much more power, you would be happier. But at the same time, in case that we get a move down, you're not going to be necessarily surprised. So overall, in QNT, I think right now we are in a very healthy place. And there's, at least at the moment, not a whole lot to be worried about. We are just following the bullish track in here. And I hope I explained everything well and you understood what is going on in Quant's price chart. Anyway, If you found any value in my content, I would really appreciate if you like this video and consider subscribing to my channel and follow me on Twitter. And if you want more, maybe you want a complete analysis for your own specific crypto, or maybe you want to learn some decent TA in order to be able to make good money in the markets, you can become a member and ask me anything but. And until the next update, I hope you have a wonderful time with your family and loved ones. Goodbye.